Hey, if you're looking to create an opening balance sheet for your startup, then you've come to the right place. We have built a startup balance sheet template built specifically for opening balance sheets for brand new businesses. Now, most balance sheet templates are just that. They're a template with a balance sheet, and they don't really tell you how to fill it out. And so what we did a little bit differently here is we created a 2-tab balance sheet template that on the first tab, it's going to ask you plain English questions. So how much cash do you have in all of your checking accounts, right? And then you answer that question, and it puts the dollar amount in the right spot on the balance sheet for you. So it's going to go through and ask you a number of questions and then produce the balance sheet built specifically for your startup. And so I'm going to go through and show you how to fill this out. We have a link to this free template in the description of the video below here, and you'll be able to grab that and follow along. First of all, though, my name is Adam Huxema. I'm the co-founder of ProjectionHub, and over the last decade, we've helped 50,000 entrepreneurs create financial projections for all sorts of different startups and small businesses. And today, specifically, I'm going to walk you through this startup balance sheet. So let's dive in. All right, so the first thing you need to know is that the cells that are highlighted in blue are the assumptions that you're going to want to change throughout the model. So you can put in your the date of the balance sheet. This should be either the current date or the date that you are planning to open, and you want the balance sheet to reflect that opening date. Then you can put in your company name. And then again, what we do here in this tab is just ask you plain English questions. So how much cash do you expect to have on day one of operations? So kind of give you an example of what this template would be used for. Let's say you are opening a restaurant and you expect to invest some of your own money. You expect to get a loan from a bank, and you expect to buy equipment and lease space and do all the things that you need, buy initial inventory, things that you need to do to get ready to open the restaurant. And you want to provide an opening balance sheet. What's that balance sheet going to look like on day one of the restaurant opening? That's what we're trying to accomplish here. And this could be the same for a software startup or really any sort of new startup business. We're looking to answer these questions as of day one of operation. So we're going to say, hey, we want to have $50,000 in cash in the bank on day one. And we think we're going to have $15,000 worth of inventory in our restaurant on day one. And then maybe we had to pay $10,000 in prepaid expenses for our lease and utility deposits. And then this says on day one, we have any other assets that you could sell for cash, like stocks or bonds? Let's say 0. We probably won't have that. All right, fixed assets. Let's say we had to buy $30,000 worth of equipment, furniture and fixtures, maybe $30,000 of furniture and fixtures, and maybe $30,000 of leasehold improvements. So we're leasing the space. Now land and buildings, so we just said we're leasing the space, so we're going to leave that blank at 0, and other fixed assets at 0. Now, what do you expect the value of your intangible assets like patents, trademarks, copyrights to be on day one? This is probably going to be 0 in most startup cases. If you're using this template because you're acquiring a business and you want to have an opening balance sheet as of the day that you acquire the business, it's possible that you would be acquiring patents and trademarks, and that may be where you'd have something in this field, but otherwise this is probably going to be left as 0. Same thing with goodwill. If you're acquiring, then you might have some goodwill on the balance sheet on opening day. Do you have any other assets? This is kind of the catch-all here. All right, jumping to liabilities. How much we owe in unpaid bills to suppliers, vendors, contractors on day one. So let's say we spent $30,000. We said we spent $30,000 up here on leasehold improvements. Maybe we still need to pay the contractor $15,000 of that. Do we have any short-term loans? So this could be credit cards. Maybe we have $15,000 on a credit card still. And how much do we expect to pay in the next 12 months on any longer-term loans? So let's say we got an SBA loan, a Small Business Administration loan here to open this restaurant, and we expect we're going to have to make 12 months of payments on this, and that the total amount of principal that we're going to need to pay over the next 12 months, let's say that's $20,000. And then we'll leave this next one blank. How much will we owe in loans to banks and other business lenders on day one? Let's say our SBA loan was $150,000. And will we owe any loans to other owners or individuals on day one? Let's say 0 for that. And then will we have any other long-term debt? No, we're going to leave that as 0 as well. And then how much do you expect to be invested into the business on day one? So this is not including loans. This is actual equity investment, what is being put in. So let's say we put in $50,000 of our own money into the business. So I'm showing you an example of just going through and answering these questions now. I can almost guarantee, unless we got really lucky, this balance sheet is probably not going to balance. And this is a common problem that most people struggle with when they try to create their own balance sheet. And so I wanted to show you that as an example and then show you what to do about it. But let's go ahead and click view and see what happens. So it's piped in all of our balance sheet items here. And we come down to the bottom, and sure enough, it says balance sheet does not balance. So why isn't it balanced? Well, the thing with the balance sheet is that we want the total assets here to equal the total liabilities and equity. That's what needs to balance. Total assets needs to equal total liabilities and equity. So we saw up here that total assets was 165,000, and we've got total liabilities and equity of 230,000. So there's a difference there of 65,000. So let's say we realize, oh, you know what, we forgot, we know what happened. There is $65,000 more in assets that we forgot to mention because we also had a food truck that we bought for the restaurant. And so that should have been added up here in this vehicle section. So let's just add 30,000. We had the 30,000 already. We're going to add another 65,000. And then let's come back here and see, hey, we're balanced. So this is how you're going to have to troubleshoot as you're filling this out. You need to figure out how to make the thing balance. If you have any questions as you're going through this, don't hesitate to reach out to us or leave a comment in the video, support@ProjectionHub.com, and we'd be happy to help you figure out and troubleshoot why your balance sheet isn't balancing. So with that, yeah, hope this is helpful, and let us know if you have any questions. Thanks.